Hello, and welcome to the Block Solid podcast, where we talk about the evolution of property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, co-founder of Solid Block, pioneer in real estate tokenization, and I'd like to welcome Jason Fishman as my special guest on today's episode. Hey, Jason.
Hey, Yael. Pleasure being here today.
Pleasure having you. Where are you talking to me from?
Los Angeles. I'm actually based in Marina del Rey, right on the water here, Silicon Beach, as it's referred to in many circles, right around Venice, Santa Monica, Playa Vista, a lot of startups, a lot of tech companies operating out of this area.
Amazing. Describe to me what you see outside the window today.
It's on the other side of my place, but I'm on one of 7 peninsulas in Marina del Rey, so a bunch of yachts. The other side of the other peninsula, Mother's Beach, a couple of the hotels at about a half mile from the Venice Pier. So
very cool. And what's the weather like today? It's February 3rd, 2021.
Wish I had something better to report there. LA, I mean, we had 85 degrees Fahrenheit a couple weekends ago, beach weekend in January. But today it's cloudy, low 60s. Not sure on the Celsius translation there, though.
Very cool. Awesome. So I want to tell our listeners a little bit about your background. Jason has over 10 years of experience as a new media enthusiast who genuinely enjoys planning, activating, and managing scalable marketing strategies. He's an expert in digital channels, including search engines, social media platforms, and programmatic ad exchanges. Jason worked with many top 100 advertisers, leveraging traffic algorithms. Jason now takes this knowledge and applies it to scale brands with effective marketing tactics. Since launching DNA in 2014, Jason and the team have worked with over 400 brands to deliver industry-leading results across e-commerce and digital funding campaigns. And that's why I was super interested in talking to Jason, because a lot of what we're doing at Solid Block is, of course, fundraising for real estate assets, for different real estate projects that are looking for funding. So this is critical. Now, Jason has been showcased in panel and individual presentations of tech and marketing conferences, along with his Test, Optimize, Scale podcast. He's also committed to a number of thought leadership content projects, including the Forbes Agency Council. He manages a Los Angeles team with experience in all aspects of the user journey. Is that accurate, Jason, more or less?
That definitely encapsulates it. You get so busy on the day-to-day, it's hard to take a break and get a full glimpse like that. That is definitely the story.
Great. So I love the name of your agency, DNA. It stands for Digital Niche Agency. I'm curious to know what came first, the acronym or the word DNA?
That chicken or the egg scenario, it basically evolved at the same time. And a lot of what we do is digital advertising, leveraging audience data. Right out of the gate, we started with programmatic ads before even diving into Facebook. So we're using machine learning to buy across thousands of websites at a time, thousands of apps, and at very specific audiences. We like to find that niche. We like to find that 1 in 7 billion, if you will. Look at their digital DNA. We'll often cast a wide net, find pockets of performance within our campaigns, and then optimize towards that. That's how we've been so effective in our initiatives, in our campaigns as a whole. And that's why the name was so relevant. Digital DNA, focusing on that niche and being able to drive results from there.
I love it. So what do you consider to be the DNA, as in the building block of the entity of your company or profession as a whole? What are the virtues that you're looking for when you're hiring teams, and how do you build a strategy?
Sure. So we work with startups, mid-market organizations. As you heard in my bio, my portfolio in ad tech before this consisted of top 100 advertisers, Fortune 500 type companies. And I have to say, it's far more exciting, far more rewarding for me to be focusing at this level. If I did a campaign in the past for a top telecom provider, telecom software, hardware, what have you, I would be one of 100 other vendors in a spreadsheet, another line item, and be considered for the next RFP, the next proposal process, where current day, I'm directly part of my client's growth. Again, a lot of excitement on the team. And our virtues, our values, we really set out to create the agency that we wanted to work with. I mentioned ad tech. I would sell and launch campaigns with some of the top agencies, some of the top brands on a direct level. Had led an in-house marketing team for a social gaming startup here in Santa Monica. We secured $3 million in seed capital, went through different agency conversations and vendor conversations there, and actually started my career with a traditional agency. So had an idea of the stigma around marketing groups and digital agencies, also knew the value that they could provide when effective. So we mapped it out to be that group. And the three core values we set on, which we found many complaints around when talking to founders about their past agencies. First and foremost, be easy to work with, communicate early, and answer with algorithms. I set up my team. We seek out some of the best talent within the industry and within the marketing world as a whole to be able to work on these investor acquisition campaigns. We have full models and standard operating processes and a platform called Monday that we go through to create a consistent experience each time. But it all comes down to those three. We like to make things as easy as possible for the client and use white glove service throughout that. And that's applicable to listeners even within their own teams, even being the CMO talking to the CEO or the marketing director talking to the CMO or, what have you. But be easy to work with. I think it's an underrated value set today, an underrated trait. Communicate early. A lot of times it's around communication when you hear these agency client relationships fall short. So not only communicate well, but communicate early. If you think something may steer from the path, let's talk about that. Let's collaboratively address that versus figure out what happened later and be shy around some of these obstacles. And lastly, answer with algorithms. And I talk a lot about this when speaking to strategy. The only way to measure is with numbers. So we need to have that present in our discussions. I can't just say, hey, ads are going good, or we wish content was doing better without following up with the specific metrics. Hey, we shoot for a $20 CPM. That means every 20K we spend, we're reaching 1 million people. We look for a 1% click-through rate. From those 1 million people, we want to see 10,000 visitors. We're then looking for a 2% conversion rate. We want to see 200 conversions come from those 10,000 visits or more. Right now, we're at a 1% conversion rate. Here's some optimization concepts that we want to implement to get us up to 2%. That to me is a far more productive conversation for everyone involved. There's an educational process, so not everyone has to be a marketer to fully get this. But again, we're speaking about something tangible in that situation.
I love it. I love these 3 points. And I think a few of those we're going to also implement within the company, even though we're not a marketing agency like you guys, but definitely the communication between partners and clients is just so important. Absolutely. So you worked with hundreds of clients in the space of fundraising. What makes you so successful? And you talked about these metrics and numbers. I'd love to hear a few more numbers of your own with respect to this.
Great question. So I mentioned that we started with startups and we found fundraising, capital raises to be a common theme, a common initiative right out of the gate at that. And we're putting together marketing sections of business plans. We are part of investor discussions. And we are then introduced to portals, equity crowdfunding platforms, where we can introduce investors to an offering. This was exciting for me. Again, I had a background. I had gone through a process where we successfully raised capital, but it took forever. I had to create over 75 versions of a deck to customize for each audience. I don't want to say we're lucky to get capital, but in many cases, groups do not. So I could see a lot of companies going through those steps and getting nothing. So when hearing about a cleaner version, a more effective route to get capital, I was immediately excited. We began running advertising campaigns for Reg D, for accredited investor only initiatives. I was leveraging data partners that I'd used in the past in my career in ad tech. And we saw performance, we saw results, we saw things scale from there. Now, we got attention from the crowdfunding world. Equity crowdfunding wasn't quite there yet. And we started working on a lot of reward crowdfunding campaigns before Reg CF, Title III of the Jobs Act, came into effect in May of 2016. Started running ads right out of the gate there. Got into cryptocurrency digital asset campaigns in 2017, and a huge appetite for those from the industry. We built a portfolio around that very quick and still work directly today. And I'm mentioning this timeline because throughout that entire process, we did things that worked and we hit obstacles. We saw campaigns that didn't work. They say to be an expert at something, you have to fail at it every way you can. And I could certainly say there's inherent obstacles for marketing. Now, I'm not saying, hey, we saw campaigns didn't work and now we're great because of it. That is an element to it. But for me, it was more of the campaigns that were not hitting their performance benchmarks. And we were able to optimize to a point of effectiveness, to a level of result. And the critical thinking behind it to get it there, what was really what showed us what worked and what didn't work across these initiatives, number one. Number two is our audience data. So I mentioned third-party data that we were using dating back to 2014. Because of the power that we looked at from that tool by applying audience data to our ad campaigns, we set out to create our own audience data. We've had the opportunity to test it across a full spectrum of industries, budget levels, timelines on these type of investor-focused campaigns. Then been able to identify what I call historical equity crowdfunding investors, investment crowdfunding backers, what have you, and can target those for the next round of campaigns. We've been able to validate which audiences work, which do not. Then we've found ways to research and find very specific individuals within the niche that we can reach out to on platforms like LinkedIn or other types of systems that it's compliant, we're not spamming. Meanwhile, we could go after exactly who we want. Those steps that we've taken give any client that we bring on a massive head start, to say the least. And we've been able to confirm that in our case studies, again, going back to the actual measurements and looking at the results that these campaigns are producing. That's why we get referred by some of the top lawyers, accountants, advisors, portals, exchanges in the space to work with new groups, because they've seen that type of consistency in our results.
That's great. So you kind of pointed out regulation that changed and that allowed you to do certain new things, new campaigns. So what changed in marketing for crowdfunding or for credit investor outreach since you jumped into the game, besides the regulation maybe?
It's moving forward every year, month over month. In 2014, when I was first told about Reg D, this dream of the Jobs Act and being able to bring unaccredited investors to the table in a democratized fashion where virtually anyone would have access to these early stage deals. The stories about Facebook or any of these tech groups that have gone public and how the early stage investors benefited from that. It becomes available by being able to bring unaccredited investors to the table. Now, I'll tell you, there was a huge delay. May 2016, a lot of meetings in between 2014 to that point. A lot of discussions with groups that had no knowledge of digital marketing. They thought an investor would never click on an ad. They thought one email to these targets would produce conversion because the deal is so exciting. And that's simply not the case when you look at digital behavior. Going back to the metrics I was sharing, 2% conversion rate, 1% click-through rate, that's virtually no response. Looking at the numbers and the high volume you need to bring to see these levels of performance, I saw the group saying, hey, we don't think digital marketing is going to work. We think just direct outreach to our credit investors is going to be the ticket. Calling us 6 months later and saying, hey, our campaigns aren't moving. Could we now launch that ad campaign? So the point to that is more adoption of digital trends by groups all around the landscape in this industry has been a big change that I've seen. A lot of collaboration around that has been exciting too, where we'll get provided audience lists to target from some of these different type of firms. Getting back to regulation, we've been told about the expansion to Reg CF for years. And, happy to say that that's finally coming into effect March 15th. There was even a freeze that occurred as of last Friday, January 29th. That freeze was removed and March 15th is set to increase. When I say Reg CF, that means you can raise $1.07 million from accredited or unaccredited investors. And there's some limits on how much you can invest, including a $107,000 cap across all investments for any one single investor. And that's at the top household income or net worth level. So a lot of that's changing and it's increasing to $5 million, a far more impactful level of capital. Various stage investors can participate at larger levels. There's going to be a test the waters period where you could do pre-marketing, pre-launch marketing, and reservations. It's really going to change the game. Reg A Plus right now has a cap of $50 million, and you could raise that from accredited or unaccredited investors. That's increasing to $75 million. And then, still have Reg D that can be a side-by-side to these campaigns and allow you to raise more from accredited investors and have different terms to that offering. So I have been seeing a lot of changes, particularly over the past year. Since March of 2020, we've seen month-over-month growth in the industry, which we were unsure what was going to happen late March. And it was a relief seeing these type of numbers in April, not just on some of our campaigns, but a lift across all of them by mid-April, and the analytics in the industry then showing an increase of monthly raise in April, May, June, July, so on and so forth, with December as the top month. Still waiting to see all the numbers come in for January, but right in that same category, right in that same tier. And that means a few things. More investors are in the space. Platforms like WeFunder now have over 850,000 investors on their portal. Republic has over 800,000, and they have different departments within the portal, including real estate, blockchain. There's then Start Engine with a massive amount of investors, always in the top 1 or 2 spot. Seed Invest, Micro Ventures, the list goes on and on and on. I think there's about 70 FINRA regulated portals today. The same thing's happening with Reg D, the same thing's happening in digital assets. So more investors in the space, better quality deals, more acceptance from institutional and various types of VC type groups of these offerings, where years back they stayed away from them a bit. Retail investor explosion in 2020 has really had a positive impact on these private equity deals. And similar to what we were seeing last week with Wall Street Bets and Robinhood and GameStop, not to have any type of political perspective on it, but just showing the power of the crowd, just showing what the organization of 3 million individuals and a large percentage of them investing in a single deal can do.
Yeah, that is really incredible. It's really something, right? That's something they got to teach in business schools right now.
The book is being written.
The book has been written, right? So you touched upon Reg D a little bit, and I read that in 2014, you worked on your first Reg D campaign with Rayton Solar to target accredited investors or high net worth individuals for seed investment. Although their initial goal was $500,000 in equity, they ended up surpassing that to $2.8 million, and it's still one of the top campaigns on Fundable. Now, I generally, we're raising a seed round, and I'm wondering how they could take in that much money with it. I guess maybe it was somewhat of a high valuation. But what are some of the important knowledge and experience benchmarks you gained from working with them, which you found later to be especially valuable for other projects as well?
Yeah, and we briefly worked with them on a reward crowdfund campaign right before that. Didn't have as much planning around it. And they saw a decent amount of backers, but the average backing amount was just too low for where they needed to go. They took their video, they took their assets, they took these different things that they put together and went to a Reg D accredited investor style campaign. Mm-hmm. Now, we worked with them on their content, but the advertising was the key driver there. At that time, we were actually using display banners, programmatic, for very specific industry sites, very specific investor and finance, user hangouts, and applied some of that third-party data, household income, net worth, to ensure that they were accredited. Then various types of investor behavior data sets: high risk, high return, credit investor, early stage, various types of private equity type audiences that were made available to us for an increased CPM, for an increased advertising rate, how we were using the data. There was a longer sales cycle, but the average investment amount was huge. We even had a 7-figure investment in there. Campaign quickly jumped up to 300, then 500, then $1 million, then 1.8, then 2.8 million. So it was exciting to be a part of. The founder, Andrew Yakub, became a Forbes 30 under 30, campaigning and speaking at different conferences and becoming a member of different groups as a result of that campaign. Not clearly as a result, but it was part of his bio at that point. So we then took those results. We then took those findings to a Reg A Plus campaign with them about a year and a half later. They had already been working on the planning, and then we were part of what was called the Test the Waters, the reservation stage, for the last month, 2 months leading into their Reg A Plus. Then from January 28th, 2017 to that date, 2018, we worked with them on their Reg A Plus campaign. And I wanted to mention it because they got in contact and used Bill Nye, the science guy, as an endorsement in their video. On their offering page, Bill promoted it on his social channels, and then we were able to use that video in the advertisements and various different cuts that were created throughout the entirety of the campaign. I'd actually produced over 10 million on the analytics. It was then 6.4 million when everything closed out because of different circumstance. And I think for various reasons, they chose to process 5.5 of it, but over 4,000 investors, again, showing the power of the audience, power of the crowd. We worked with them on a Reg CF campaign as they brought in their products and moved their name down to Rayton. In 2020, it hit the full cap. They're now on another Reg CF. We're on their 4th round with them. And once the rules expand, they're going to be ramping it up to 5 million. At the moment, they're capped for how much they can raise. But growing audience, 10 million in capital that's been produced from these campaigns for them. As you mentioned, a lot of findings with the audiences, with the social proof from an industry expert, and being able to leverage the audience with social sharing, bringing them in for the next round for a second conversion, have all been very valuable insights we've taken from those campaigns.
That is amazing. So these investors who came in the first round, they still weren't receiving any dividends or any fruit of their investment, right? And they still went on to invest in the second round, right? Kind of showing their belief.
That's correct. And Rayton is in an industry where the comparables are valued at much higher levels. And once they get their particle accelerator in action, once they activate some of their B2B relationships, their total value is going to be substantially higher than it is today. Many speculators have stated when doing the research. So that's what those investors are really holding out for. Not so much the dividends in this scenario. I am very excited about some models that I've heard with those type of regular payments. And again, industry is rapidly moving forward. I am hearing about those type of mechanisms more and more.
Yeah. So, I mean, that's part of what we're doing, right? Enabling investors to get liquidity in projects. Once the product reaches a certain stage, their valuation increases by a lot. So then you can exit, get some cash. And then next time there's a round, you're like, wow, these guys made me money. I'm going to invest in them again. So that's what I'm hoping is going to happen with tokenization, frankly.
Absolutely. I can 100% see it. We've worked on Reg D campaigns for commercial real estate groups in the past. High minimums, up to a 250K minimum, where Reg D is historically 10 to 25, at times 25, I should say 50 to 50. I'm sorry, 50 to 100. It's generally somewhere in those brackets. And much longer timeline before the investor sees anything. There is a tax shelter involved through depreciation, but at the same time, I think as soon as you start using words like dividends and talking about those physical returns, those investor success stories that you're mentioning, you're going to see a huge amount appear by participated in something like that and it was benefiting me, I would share with my brother. I would share with my close friends, people I travel with, different people in the industry. Investor success really gets brought up to a high degree. And I think that's what we saw in late 2017 with the emergence of Bitcoin to some of the mainstream markets and watching it go from, 1,000 to 20,000 in BTC price. I think that's to an extent what's been happening since November a bit. There's also PayPal and all these other partners that are fueling the growth. But at the same time, when your friend tells you they bought at 5K and sold a portion of it at 40K, it gets you excited. It goes a long way. It can be more meaningful than prediction that, hey, in 8 years, this is what I'm anticipating. I think you guys are going to get a really strong response from that. Everything I've heard thus far has definitely raised my eyebrows, and I've been able to show the team we're excited about it. So I think that is the future, and having some close relationships with small real estate investors here in Los Angeles and having understanding for everybody to be able to participate in these type of deals, I think is really game changing.
Yeah. So you mentioned crypto. I know you worked with crypto exchanges. What are some challenges for marketing there and in general in the crypto industry with respect to regulation and limitations of social and ad networks as well?
Sure. How much time do we have? There's a lot of regulation behind cryptocurrency in advertising, but there's a lot of regulation in digital advertising as a whole. It's more common than not to get an ad disapproval on Facebook for a given client during the flight, during the campaign months. This year, anyone who had 2020, there was a portion of the year where anyone who had the word COVID or coronavirus on their site, regardless of the product, the ads were being blocked due to some different rules that they had implemented. We're constantly being blocked on ads. Anything around financial products, anything around CBD, anything around supplements. I could list about 20 other categories where we're going to see ad disapprovals, and ad creative, ad copy is often mistaken for one of those industries. So we had already worked with reps at Facebook and other platforms to compliantly run advertising after it reaches this type of disapproval. And I focus on Facebook because it was one of the more difficult platforms where we basically had to remove words like crypto. We had to remove words that could be flagged from the social page, from the ads, and from the funnel. In doing so, we were following the rules. The same way a retailer who offers a product that could not be allowed by Facebook can still promote their site, they could still promote their physical store, they could still promote. And then once someone gets to that platform, they can then find this type of offering. There are plenty of ways you could focus on the function rather than using words that can be misleading and get the ad campaign banned as a whole. There are cryptocurrency approval forms. We have not had as much success there on Facebook, but on Google, for several of our app clients, we have been able to get approvals and run a high amount of app installs towards the Google Play Store on a daily basis, and looking at install to funded account percentages that are very favorable, cost per acquisition of funded accounts that perfectly fit the model and are extremely scalable, particularly with the high volume of searches over the past few months for cryptocurrency. Apple's been an easier place to run. There's a variety of ad networks that are completely welcoming cryptocurrency campaigns, others that you have to jump through a few hoops. The same's true with publishers. I'm part of the Forbes Agency Council. I have obstacles for when I can mention cryptocurrency and the type of content it has to be around, the type of assurances and clarifications I have to make. They do have a crypto council as well too, but just to give you an idea, there's a lot of question as soon as that word is mentioned. You heard me say digital assets earlier. I've heard different speakers say things like the first rule of enterprise blockchain is you don't mention the word blockchain or don't mention the word cryptocurrency. That's been a theme for some of our clients where they want to talk about the product without saying the word. They'll later bring into it because you want to show value. You want to start the conversation before allowing the audience to try to categorize what it may be. But I've seen everything work. We also run ads that say, cryptocurrency buying, Bitcoin buying, and talking about their value proposition. So it's across the board. My whole philosophy towards marketing, I summarize in 3 words: test, optimize, scale. And as we're testing different messages, as we're testing different ad placements, we see where we're allowed. We optimize towards the ones we're seeing the best performance, let alone that we're able to have live campaigns on. And then we ultimately scale the key drivers. And that's been very effective across our digital asset campaigns.
That's awesome. Jason, you've worked with over 400 brands, as I mentioned, on data-driven marketing campaigns. Can you share with us what you consider to be your greatest achievement with one of those companies, or maybe several, if you'd like? And was it the amount you managed to raise, or was it the ability to overcome certain challenges that you actually mentioned? And yeah, I'd like to hear more metrics, more success.
Sure. It would be hard to hone down into one campaign. We've worked on Reg A Plus campaigns in the cannabis industry, CBD, that have surpassed different records for Reg A Plus campaigns. I mentioned Rayton and some of the success we saw there. I always love to mention Popcom and their CEO, their founder, Dawn Dixon, hosting her own platform her own course at this point called Crowd Coach. And we were running advertising for her campaigns in Start Engine. 2 Reg CFs in 2019 and in 2020, both hit the full cap, 1.07 million. Both were featured by key publishers and bringing on a very strong audience, a lot of peer-to-peer marketing. Don, Jared, and the team are now working on a Reg A Plus campaign and have much higher goals that they're looking towards for 2021, and just a consistent return on ad spend across the board. Some of our case studies around it, I think the first campaign was 15x, the second one was 16x return on ad spend, which is unheard of and speaks to how strong the audience is responding to Dawn, to the messaging, to the product, which is automated retail, leverages blockchain technology, is used in different growth verticals, including cannabis. Very forward thinking in a lot of ways. But seeing those type of results for ads has been very pleasing to the team, very pleasing to the client, exciting adventure to be a part of. Also seeing that on our full Reg CF campaigns, a lot of consistency around the metrics there. And about 20 to 50% of those investors will come from ads. Even if that's the primary or sole traffic source, about 20 to 50% of the investments will come from ads. And then simultaneous with that, the audiences that are watching the campaign, whether that's on the portal, whether that's from organic traffic, publisher coverage, repurposing of publisher coverage, we'll see investments come in, and then this other audience lift at the same pace. So that's been a key finding there. And before in our discussions, we were speaking about Hybrid Block, have a published case study there. They did 50 million across their private and public sale. We were part of the public sale, and we're driving traffic to their Telegram, which grew in audience size well over 30,000, highly active. I think they had a full team moderating all of the discussion points there. And we're part of their conference, Hybrid Summit.
It's a blockchain company, right?
Yes, Hybrid Exchange. This dates back to about 2018, but that based on different changes that they've had there, different things that were announced at the conference, have abilities to share that. Also working with several exchanges now that are seeing over 100,000 new users a month coming on board at great install funded account rates, seeing some traction on some upcoming projects for user acquisition too. We work with groups post-funding at times as we have this data, and we're targeting in many cases user owners, whether that's B2B, whether that's B2C, whether that's just relationships with accredited investors and strategic partnerships that it can really grow the projects from there. So we'll work on campaigns where the lead generation to a B2B client or the B2C client is coming at 10, 20, X type returns. One of our top Reg CF campaigns, we saw a 31X return on ad spend. We go through our ad reports on Monday afternoons as a team, and anywhere from 25 to 50 live ad campaigns at a time. We're looking at 3X, 5X, 10X. This one's at 18. Always exciting metrics to share.
Yeah, break it down for me, please. 31X return on ad spend. What does that really mean? And how does that translate into ROI overall for the project?
Yeah, that was a campaign that raised 1.07 million, the full cap of Reg CF, for an organization called Black Mama Teas and Cafe. And the CEO, Vanessa, again, very powerful leader covered right and left by publishers, repurposed on those articles and shared by different influencers across the board. It's one of the metrics we look at. And I believe the article was shared over 100 times. We were running ads that were producing new investments around a $20 to $30 cost per acquisition.
Okay.
So even if we're seeing a $300 average investment, I think this one was around a $700. We're looking at a 10x return on ad spend there. I'm looking at $20, 31x return on ad spend, get an idea of where the average order value was being placed. Again, being able to bring investors in at that volume, seeing 20 to 50% of the round being completed from that, and then in a reflecting fashion, more investors from the portal. This campaign was on WeFunder. More investors from organic traffic, more investors from audiences who are on the sideline participating is always a big deal, always a good thing for everyone across the board, especially the investors as the company's taking more traction, their positioning's even becoming more valuable during that process by many perspectives. So that's what the 31x means. That means if you're spending $100K on ads, if you're getting 3.1 million back on a Reg CF campaign post March 15th, or on a Reg D or Reg A plus, that is what that multiplier indicates.
But then you possibly are getting another 50% of that from other sources, because you mentioned, in many of these campaigns, only 50% came from ads and the other came from kind of like reverberating effect from the traction that you got. Because obviously, why our article, why newspapers writing about the project, because they see the traction. All of a sudden, these numbers go up, like it's getting to its goal or maybe superseding its goal. And then they're writing, wow, this project over-raised by 300%. And then more people come in, right? So it's kind of all connected, right? The ads are connected to the other sources and the other sources are connected and fueling the ads.
Exactly. And a lot of groups will ask us like, hey, what's your best performing channel? We want to do just one channel. And it's exactly as you said, more of the user journey. What are the touch points? Generally 7 or more before an investment occurs. So what is that storyline that we take the audiences down? First, an offering page, a landing page. Do they sign up for an email for a free asset from there? Are they then getting emails? Are those emails pointing at social content? Are they pointing at video content, blogs, different type of press activations? Are they now being retargeted with ads? Maybe they're brought to the table with ads at first. What channels of ads? All of that we want to identify in the analytics, and all of it is part of that conversion process. So, in that scenario I just laid out, all of those channels with the right conversion window could look to attribute the investment to the organic or paid advertising.
Got it.
And for us, we're really trying to figure out what are the elements involved and which ones can we scale. Which ones can we increase so that we can see more investors come in the following week?
That's amazing. All right. So my last question to you today is about your podcast, Test, Optimize, Scale. What inspired you to begin your podcast? What is it about? Who can benefit from listening in?
Yeah, great question. I was asked to put together a podcast for a couple years. There's a great podcast producer who worked with us on the first 6 episodes in person before the shutdown, who was talking about our conversations and some of the discussions I would have with founders. I was hosting an event here in Santa Monica at an accelerator called Marketing Mondays for about 6 months and having these firsthand discussions, and would bring different guests to the table, and was told, hey, this is really educational stuff. This is valuable. This is insightful. You should publish it. I was also doing a lot of physical conferences at the time. I've spoken at 8 countries to date, and was spending a lot of time in airports in 2019, 2018, but was put on different panels. We'd have a small window of time. The podcast format allows me to reach back out to speakers I've been on panels with, different groups we've been able to partner with, different clients and founders, have them on the show, talk for an hour, be able to really dive into their story, talk about what they tested, what didn't work right out of the gate, and how they optimized, and ultimately what allowed them to scale. Then able to share it with our audience, getting great feedback from groups that we're working with, even with groups that, for whatever reason, are unable to work with us. Maybe they're doing everything in-house, and talking about how much of a lift it's providing to their marketing. So, really just an avenue for thought leadership, want to position us on an ongoing basis at the forefront of investor acquisition. And it's given us something to market for ourselves.
That's amazing. I love it. So thank you so much for joining me on the Block Solid podcast today, Jason.
Thank you for having me. This has been a blast.
Yeah, it was great having you on. You can find us on Spotify, Apple Podcasts, or by visiting our website at solidblog.co/podcast. If you enjoyed the show, don't forget to rate and review and spread the word. Thanks for listening. Bye, Jason.
Thanks, everyone.